the Financial Survival Network. Now more than ever.
And welcome. You are listening to Watching the Financial Survival Network. I'm Kerry Lutz. Today is 1/10/22. And what does that mean? I don't know. But hey, we got John Rubino on with us, dollarcollapse.com. And we're looking at the taper-tantrum and a number of other issues, cryptos, you name it. We're doing it. John, hey, happy Monday. Taper-tantrum is off to a prodigious start, isn't it?
Hey, Kerry. Yes, the Fed doesn't even have to raise interest rates now to tank the markets. All they have to do is say they might do it. So each temper tantrum cycle or taper tantrum cycle is getting shorter and shorter. You know, it used to be that the Fed actually had to do something. Now all they have to do is talk about it. And so stocks in the US are down 5 days in a row. Tech stocks are tanking. And the ARK fund, which is really the exemplar of this whole thing, was the absolute darling of the last few years. You know, it was this parabolically increasing ETF that everybody wanted to be part of because they buy the most speculative new tech stocks. Yeah. And now everything they own in their flagship fund is down except Tesla, and the stock price of the ETF has given back all the gains that it made on its run up. So now its early investors are down in this thing that was the best investment in the institutional investing space over the 2 years previous to the last 6 months. So a lot of stuff is being reversed out in a hurry. And based on history, it has just begun. Although, you know, that doesn't mean that the next few days are going to be exactly the same as the last few. But we're in a place where, in the past, when we were here, more carnage ensued. For instance, there are now more stocks, or as many stocks, hitting 52-week lows as right before the previous two crashes. In other words, 1999 with the tech bubble and 2007 with the housing bubble. This pattern repeated, where a lot of stocks went down. The market was elevated by a handful of remaining good stories. And then when those good stories rolled over, everything crashed. And so we're at a lot of stocks going down part of the story right now. And what would come next if we follow the script is that Apple and Amazon and Netflix and Facebook will also tank. So we'll see. The way the market's behaving, that could easily happen because people could easily panic seeing what has happened in the last 5 days.
Oh, yeah. Well, my gut feel is that they're going to come to the rescue here. The Fed talks a good game, but you know that when it comes to actually doing something, we'll see if they do. I'm not convinced. But like you said, the mere mention of higher rates is enough. The reality almost doesn't matter. It's the perception. Imagine if they announce all these higher rates and then they never come in 6 months. Will anybody remember what happened now, beginning of the year?
Well, it's hard to know what we're going to look back on as important, given the crazy stuff that might be coming. We could look back on this week as the good old days, when stocks were only down 6 or 7% in the space of a week. But I think you can cook it down to a very simple question. What is the number? How far does the NASDAQ have to fall before the Fed takes back the whole tapering thing and comes in with easy money again, before they capitulate? And I don't think it has to be too much further, just because they understand that a big equities bear market is systemically destabilizing now. It could knock out a lot of other industries that wouldn't normally be pushed into recession by a stock bear market. Well, these days it's different. We're so fragile that a 25% drop in the NASDAQ could actually kill some other industries. So I think the Fed is aware of that, and they're going to err on the side of caution. But we have to remember that inflation is running at like 6% right now. So erring on the side of caution has a lot of different meanings for the Fed. Mm-hmm. Because they should be aggressively fighting 6% inflation. but they're just so far just talking about doing it. So you could make the case that they're already erring on the side of caution with regard to inflation. They don't want to destabilize the system by fighting inflation too aggressively. So they're in a box. These guys, they're arsonists who set a house on fire, and now the fire is spreading to the rest of the neighborhood, and they can't put it's one of those stories. So I'm not sympathetic for these guys. They created this epic mess, and they're going to have to be blamed for it. That's just all there is to it.
If you remember, back in the beginning of 2020, when all the stimulus was coming out, I made the prediction. I said, make sure you go get your PPP loan now, because whether you take it or not, you're going to pay for it in the form of higher inflation, higher prices. Sure enough, that's exactly what's happening now. So if you didn't take your PPP loan/grant, now you're in the position where it's too late. You're not getting it. So I think that's an important point to realize, that this is all foreseeable, predictable. When you shut down the economy for 6 months, which is effectively what happened, the global economy, and then you pour money into people's pockets, and they keep buying and buying, even though production has been drastically curtailed. It's classic inflation of demand exceeding supply and prices going up accordingly. And then the monetary aspect of creating all these currency units, we wind up where we are. Well, that could explain a lot why cryptos have had their day, but cryptos are not holding up too well right now, John.
Well, cryptos are risk-on assets. They're like tech stocks. Don't think of them as money yet. Bitcoin is not digital gold because it trades like a tech stock, because people treat it as an asset that might double or triple in 6 months, and then if it doesn't do that, they sell it and it plunges, and that doesn't mean Bitcoin or some other crypto or some crypto offshoot won't be very important in the monetary system going forward. It just means that this is sort of the growing pains of an emerging asset class, where right now people treat them as very volatile assets that you can speculate in. So that means they go up and they go down. And right now, this is the down part of the process. So where did Bitcoin peak? It was like 65,000, right?
7 and change.
Okay.
But it had a double. It had a double peak, almost a triple peak, and a reverse head and shoulders. Very bearish formation. Now it's hovering around 40,000. It's probably going to take out 40,000. 35 is stronger resistance. Rather support. 35 stronger support than 40, but if it breaks 35, we'll see. My guess is it'll crash down to the 20s, but for a very short period of time. It seems like it's almost achieved critical mass, John.
Well, if we're thinking of cryptos as tech stocks, then you would think that they have to tank in order to get the Fed to capitulate. So all of this stuff kind of has to play their role in this script, because otherwise the Fed won't have to capitulate. If stocks don't go up or don't go down and Bitcoin doesn't go down, then the Fed can tighten to its heart's content. So they have to tank. And then at some point down there is your entry point right before the Fed capitulates and makes their big announcement that, we're going to go back to buying every bond in sight, and we're going to push interest rates down to negative territory. And you know what? We're going to come back with those small business loans too. Just line up at the trough for free money. That will happen after a stock market mini collapse here. If we have a flash crash in stocks, the Fed will have to do all that stuff. But that's kind of the catch-22. It won't do that until stocks tank. So stocks have to tank as part of this whole thing. And if they don't, then we kind of muddle along in this weird twilight zone new normal, which won't make anybody happy, So this stuff has to happen. We have to play it out to get back to where it's going to be fun again to be a speculator, like where gold and silver and maybe Bitcoin have their V bottom and just take off. I'm looking forward to that. I'm trying to control myself now and not buy in too soon.
Yeah. I know what you're saying, man. It's a crazy thing, and it's kind of has to happen, but nobody wants to admit it until it does, right?
Yeah, well, an awful lot of people have really important institutional reasons for not being able to conceive of another stock flash crash. And that, if you're a mutual fund and you're required to be 100% long, you don't want to hear about a 40% flash crash. That's a career-ending thing for you. You're
Yeah.
all of your stocks will tank. So if you're Cathie Wood running the ARC fund family, a 40% crash from here would be it's probably inconceivable. I mean, right now they must be wondering what hit them, but the idea of a huge drop from here going forward, because they feel like they're value investors now, that their little tech stocks have gone down to the point where they're literally cheap. And if that turns out not to be the case, which it did not turn out to be the case in the past two big cycles, a lot of people bought the dip in .coms after they went down by 50%. They went down by another 40% after that from their peak price. They went down by 90%, or in a lot of cases, they went all the way down to zero. So presumably a lot of little tech is going to have that same fate. And, I wouldn't want to be an aggressive tech investor now, even though some of those companies will go on to thrive in the future, but a lot of them won't. And, it's the normal end of a cycle from that point of view. A lot of stuff that seemed bulletproof all of a sudden just leaks and sinks, that's coming.
Not so bulletproof anymore, eh?
Yeah, the stuff that, well, for instance, Bitcoin is a good example of that, because it might go on to be the Amazon of the monetary world, where it survives, thrives, and at some point is worth $1 million a coin. That could all be out there for Bitcoin. But in the meantime, it's subject to market forces. And when the market panics, when people start dumping everything in sight, it's not immune to that. So Bitcoin could easily go down another 70% from here and still be a very important future part of the monetary system. It's just, those are two completely separate things. When the market freaks out, it throws the baby out with the bathwater. And, we saw gold and silver get whacked in that same way in previous market crashes. 2008, 2018, and 2020 all saw dramatic plunges in precious metals and the miners and everything. If we could go back, just to April and May of 2020, we could go back and find some things that subsequently became 10 baggers just in those 2 years, So something like that could happen again. But we have to keep our eyes on the prize, which is Fed capitulation, which might be the final capitulation. That might be the time when everybody realizes that, they're never going to be able to tighten, never, ever. And so we might as well act accordingly.
I don't see how they tighten. I mean, all they could do is jawbone, because every time they try to tighten, what happens to the market, John?
Yeah, and anybody who wonders about this should go back to December of 2018, very recent history. And the Fed was talking about tapering, and they were slightly decreasing their balance sheet. And I think they might have even raised interest rates by like a 0.5 point in total, a couple of quarter point increases.
Yeah.
And in December of that year, stocks just went straight down. They just tanked, and the Fed immediately took it all back. This is much worse than that, because stocks are vastly more overvalued. Debt subsequent to the pandemic has gone absolutely parabolic, straight up all around the world. So we're in way worse shape than we were as recently as 2018. So when this one goes, all bets are off. There's no way to know how it plays out.
So true. So true. That's a good question. How's this gonna shake out? And we'll know when we're there, right?
Yeah. Hey, do we have time to talk about those protest songs?
Yeah.
That's a great story.
Definitely. Yeah, we got to talk about them.
Okay.
Absolutely. So yeah.
So as a general premise, in a societal shift, when the artists come down on one side or the other, because their job is to kind of pull the rest of us kicking and screaming into whatever new reality is emerging. Art does that. That's its job. And so when there's a bunch of artists out there who come to a conclusion on one side or the other of an argument, it's usually a pretty powerful signal that the terms of debate are about to change. And so, okay, this story begins with Mark Crispin Miller, who is an NYU professor who got into trouble. He taught a class in propaganda, and he had them look at both sides of the mask debate, which is a very how it was sold to the public, who was on each side, and what the goals of each side were, and who makes money from what, that kind of thing, which is it sounds pretty reasonable for a class in propaganda. But the snowflakes panicked because he was asking them to look at both sides of the mask debate. Yeah. And so they reported him to the people in charge. And his bosses, the administration of the college, just abandoned him. They totally took him under the snowflakes. And then he sued them for defamation, maybe something like that. I think the lawsuits are still ongoing, but he didn't back down. He is now suing those guys with a huge chance of winning, because it's clearly what these guys were doing was stifling free speech and among other things. Anyhow, so he's got a Substack feed now, and he just posted a list of the 100 best protest songs of 2021. And most of them are, country songs or rap songs opposing vaccine mandates and shutting down the schools and mask mandates, all of that, And so it was a really clear skew towards anti-Anthony Fauci and anti-public health authorities.
And Dr. Fauci.
Yeah. Which is this important thing. This is like, remember in the 1960s, art and music skewed anti-Vietnam War, and that was kind of the death knell of the Vietnam War. So now it's happening where you got country guys and rappers on basically the same side of opposing lockdowns and mandates, et cetera, et cetera. So I think it's a very important cultural signal that we're seeing now.
Yeah.
And so I posted some of them on dollarcollapse.com, and they're actually pretty good songs. There's some good art being created around this protest against mandates.
And the whole thing with memes. The memes are like the social protest songs of today. When you get down to it, don't you think?
Well, I think it's definitely one forum for people to create art and send it out into the world and see how it's received, which then feeds back into the creator's perception of where there's an audience, So yes, TikTok, Twitter memes, stuff like that. It's all part of the same process. But I just thought the whole, the music thing was really interesting, because I was completely unaware that there was anything going on as far as this stuff goes out there, or which side the artists were coming down on. But now it looks like there's a pretty good skew towards protesting the powers that be right now. So cool. We're not alone out there. Yeah.
Kind of fascinating. Yeah, we're living in interesting times, that's for sure. Well, hey, you want to go over to dollarcollapse.com, check out John's latest missives out there, sign up for both of our newsletters. Questions, comments, shoot us an email, kl@kerrylutz.com. John, we'll talk to you in a couple of weeks.
Thanks, Kerry. See ya.
The Financial Survival Network. Now more than ever.